All right, so far it looks like I could have kept my stop on first target, which is this line right here. I hit second target up here on my first trade, closed for a 2R return. My challenge is letting the trade play out. Yesterday, I could have had 4 times return, reward to risk if I had let it play out. Today, I did better. I closed out right at 2R return, and I was going to just about put my stop up to target 1 and let that sit there and let the trade play out. Except I wanted to get the 2R return. If it would have come down here and stopped me out for 1R return, it would have been less money made. However, it would have been a win in that I let the trade play out, which is what I wish I did yesterday. I have to get it through my head that winning profits is not as important as letting the trade play out. So that's why I was able to keep it up to 2R today. I kept remembering that when I got in on this trendline break right here, consolidation trendline break, it just let it go up to target 1, let it go up to target 2, and then I said, let me just take my profits. That's what I wanted to do. Let me just take my profits. And I was almost going to put it on, my stop was on break even. I was almost going to put it on target 1 and let it sit on target 1. If I did that yesterday, I would have had target 4 hit. So anyway, I just want to make a recording of that so that I can continue to hear and see the results of this kind of thinking and process. Because if this continues to go up, and I could have kept my stop on target 1, then I need to see that. If it stops me out, right? If it would have stopped me out, then I could have had at least 1R return. But more importantly, the character trait and personality of processing the trade, let the trade play out. I need to get that into my mind. Let the trade play out. Also, one thing I like about getting out on 2R or wherever my target is, just get out, is if it does pull back, I can get back in it, possibly. Okay, I would have been stopped out. I would have been stopped out right there for only 1 target instead of hitting 2. Depending on your strategy, some people, all they go for is 2 to 1, and they're perfectly happy with that. That could be something I develop into where I don't care if it goes up to 4 or 5. My strategy is the win rate is high enough to where 2 to 1 is absolutely perfect, and that's all I need. So I'm still working all that out. The main thing that I need to get right now is let the trade at least go to 2R. Let it get up to 2R. And once it gets up to 2R, I can make a decision on whether I want to move my stop to break to target 1 or not. Yeah, yesterday it would have worked perfectly doing that. Today I would have been stopped out. So that's good to know. It's good to know. I'm going to let this price continue to play out here and see if maybe I can get back in. It's possible to just get back in right now because I already made 2R on it. If it was to go back down here to where I entered the first time, then I'd still be up for the day. So that's what's good about taking profits when they hit certain ranges, is that you can always get back in. I'm watching this carefully here, though. It definitely can pull back some. Let's take a look at the 5-minute chart. You see this fair value gap right here? That's what it just tapped into. And that may be as far as it wants to go. There's fair value gaps down. There's all kinds of them. I didn't even put this one in. There's one here. There's some on the 15-minute chart below. These two down here are on the 15-minute chart. Let's check out that. Fair value gap on the 15-minute chart. This needs to be brought up some here. Okay, what I'm trying to do, hopefully it'll work, is enter back into the trade. I see that it's come down 1.5R, so I took 2R reward and it's come down 1.5. And my stop is actually where it would have been if I left it on break even. So we're looking at a half of a reward risk on this. And I'm trying to get back in because it's pulling back decently here, quite a bit. The problem is you never know how far down it's going to drop. But I'm willing to risk a half a risk reward on it to see if I can get back in the trade. And that's one good thing about taking 2R right off the bat and not arguing about it. So if on the 5-minute chart, it has pulled back to this fair value gap right here, down to the 50 EMA. There's another fair value gap that it touched right here from before, but that one was violated. I don't even know why I have that one there anymore. Let's go ahead and get rid of that one because that one dipped way down here. There are no more fair value gaps except for this one right here. Hopefully this is where it'll bounce. That'd be great. Get another chance to get a second trade on it. So yes, I got my trade entry right here. Risk reward already set right here. Hopefully it'll stay above this trend line right here, this downtrend line right here. And it'll continue to go either sideways, consolidate, maybe come down a little bit, but stay in this area. Stay in this area right here. It looks like it came down into this fair value gap area here, bouncing off this pivot right here. Trying to stay on top of this. We'll see. This is trade number 2. Okay, we were stopped out of the second trade and it's dropping like a rock. It would have hit me for break even and I would have not had any reward on that first trade had I not taken second target. So I gave up a half a target right here of risk to see if I could catch a bounce. I'm willing to sacrifice another half for another attempt on the trade, and that'll probably be my last attempt. I want to keep at least one risk reward today. So as long as I don't risk more than another half on the next attempt, you can see what it's doing here on the 30-minute chart. It's just having a nice gigantic move down, which, you know, that happens. Shouldn't be afraid of that. 15-minute chart pulling down. Yeah, it's giving us, hopefully it'll give us a chance to get back in, or it could just completely turn out to be a reversal day. You see, it went over the top of yesterday and went up, spiked up, and now it's coming down. You know, anything can happen. It could turn red and continue to go down. It could be one of these pintail days like this, as far as we know. So I'd be very careful about getting long on it again, but this looks like a good opportunity if we can just find the right moment to get in this thing. So I'll probably give it one more try. All right, this is my final attempt here. So we'll see if it can go up. I got my stop right under this last pivot. It's breaking a couple trend lines here, getting back up over. We still have bullish tendencies on the main one that I'm watching, 10,000 tick, and the 15-minute charts are the main ones I watch to make sure that it's not going in the wrong direction, or, you know, once it closes below the moving averages on the 15 and on the 10,000 tick chart, we switch directions. And we start looking to no longer go long, and possibly once coordination and harmony are on all time charts, we start looking for short trades. So right now, hopefully here on the 5,000 tick chart, we just got it pulling back into this area here. Hopefully it'll be making a higher low here. And it'll keep going up, we hope. Because if it breaks this pivot again, then I'm out and I'm done for the day. If it breaks this pivot right here. So it's breaking the trend line on the 2,000 tick chart. That's where we got in, down here on the actually the 250 tick charts where we actually entered the trade right here. And this is the third trade today. Hopefully it will work. Technically everything is bearish now except for the 10,000 tick chart. So I don't want to enter in a trade long right now. It's borderline bearish. We have prices under the 20 and the 50 on all my time charts, except for the 10,000 tick. So to me, that is a warning sign. Of even a 15-minute chart, is also pushing below those two moving averages. So when it's that strong and that deep of a pullback, it's different when we're entering a trend line trade when it's above the moving averages and they're going up, right? If it pulls back into the moving averages and everything's trending up, that's what it did on the first red candle. That's why I tried it. Now it's pushing below that again, right? And it's staying underneath yesterday's high. Yesterday's high is this line here. It's having a hard time staying above that, on top of crossing under the moving averages. Okay, so to try a long right now is higher risk. It's not an A plus. It's not an A plus trade. Could it work? It could work. It could work. But we don't base our trades on what could and hopeful ideas. We base it on solid probability, rules, and strategies. So the trade setup and strategy right now is being broken. So what I have to do is I have to wait. Why is it broken? Because it's such a deep pullback that it's falling below the moving averages on my main charts, 15-minute and 10,000 tick chart. And I have to wait for it to reestablish some sort of stability. And you're not always going to get it at the lowest price, but you need to get it at a price that's stable. And right now it's falling too deep. And I guess there's one final little tick trade right here that could be done. If I kept the stop tight enough, I could still have some money in profit. There's one final little trade idea that I might have, but it would have to sweep this pivot right here for that. I'd have to see a sweep of the pivot and give me some kind of a narrow range bar, some type of, and even that is not really the kind of trade strategy I'm supposed to be trading. I'm supposed to be trading trendline breaks, not turtle soup trades right now. I understand the turtle soup trade is a very powerful trade once you master it pretty good there, but I'm not trading that strategy right now. I'm trading the moving average trendline ICT strategy, which has to have all the price going in the same direction on all the time charts. And right now, that direction is down. So why am I trying to go long? Right? Why am I trying to go long? If anything, here shortly, we can look for trendline breaks to the downside. We will actually be drawing the trend line this way and looking to go short. So it's almost at that point. And of course, we have to time that perfectly. And as you can see, this is a huge drop off. So that's a good thing that we're able to understand where the cutoff point is for our long positions, our long ideas. And we can see that all the time charts, all the tick charts are all going in the opposite direction. Trendline breaks are good, and they're high probability trades. When everything's trending up and you want to go long, a trendline break to the upside is valid at that point. But now looking for a trendline break to the long side when everything's crisscrossed under. And yes, it's going to happen on the lower time charts. But why it's stopping us now is that all the time charts, including the higher one, we have price crossing under the 20 EMA and the 50 EMA. Okay, that's the warning sign to stop trying to go long and let this thing figure itself out. Once price gets back up over the top of the 50 and the 20, because right here you see on this big candle on the news this morning at 8:30, it had dropped below both. I was not looking to go long when it had pierced that low. Once it closed over the top, that's when we decided to look for our long trade. We took our trade right over here when it bounced off the 20 and went all the way up to the top. Okay. So we can't take a long trade when price is trending down below the moving averages on the 10,000 tick chart. Yes, price will be below the moving averages on the 1,000 and the 250. And that's where we take our trades. It will look bearish on the 1,000. It will look bearish on the 250. And sometimes even on the 2,000 tick chart, it could look bearish. But we don't take our trades. Where did I take that trade? Yeah, I took that trade right here on the 2,000 tick chart. Right here. And we got out up there at the top. Okay. See how that's all bullish. You see the character trade change right here. But it's possible to take a trade down here on the 2,000 tick chart when it's like this. It is possible if it's hitting a higher time chart, Fibonacci retracement, or a fair value gap. This trend line break right here would have been decent. But at this point, let me just see what that looked like here. see what that looked like on the 10,000 tick chart, and you'll see if it's bullish or not. If it's bullish on the 10,000 tick chart right here, then yes, it is bullish. Why? Because price has not gone below the 50 EMA like it is over here. This is below the 50 EMA. Right here, this spike down was below the 50 EMA. No trades, no long trades. No long trades when it breaks below the 50 EMA. Over here in this circle, when it looked bearish over here, which is below the 20 and below the 50, we follow the 20, we follow the 50, whatever way that's going, right? As long as it's above the 200 on these lower time charts, especially. Right here, the 5,000 tick chart, even the 5,000 tick chart, if it falls below the, this is just telling me to be very cautious, because if it's below the 20 and the 50 on the 5,000 tick chart, then we got to be watching very. It's probably in between. It'll be in between these moving averages, which is a caution zone. We can still take trades in the caution zone, because that's what I did over here. I took a trade in the caution zone right here. It just didn't work. Trade 2. Was it trade 2 or trade 3? Yeah, I took 3 trades. So this is the 3rd trade. Got stopped out right here. I just didn't want to take so many trades that I give back all my profits. And this is exactly why holding your winners for as long as you can is important, because those winners make up for those trades that you lose. You have to have those long winners. You have to have those long winners. It's so important. All right, trade 4. I am taking a trade here. I like the pattern that I'm seeing down here in the 5,000 tick chart off the 200 moving average. A nice pintail. I did take it with a stop loss that will keep me above the red. I'm already break even on this trade. We'll see if it keeps going up or stop me out at break even. This is worth a try. It's a very small stop loss I had, and the risk reward is very, very good. So we'll see what's going on here. Hopefully this final trade will get us back up here, at least over the, I mean, look over the high of yesterday. I don't even know, because look at this gigantic drop down it did. I mean, that's just brutal. Brutal. This is the, what is this, the hourly chart? Oh, it stopped me out, I guess. Okay, it just stopped me out. Well, I had a break even on it. I had a little tiny break even on there. So yeah, that was a 1 tick winner. It paid for my commissions at least. So you see how careful and precise the entries have to be, and the risk management has to be on this. I really, really, really wanted this trade right here to work, and it might. I just had to keep my stop close on that. This was a break even, and like I said, it may just stop me out to keep right on going up, but I can't afford to take that chance here. All right, 7 trades, 1 magnificent winner, and then I gave it all back in 6 trades. So I'm basically break even, which, you know, it bites, but I'm just glad I'm not going to go in the red. See, I'm down 1 penny. Okay, 6 trades, I'm down 1 penny. So I had a really great run, and the market just completely turned around. I mean, completely turned around from what it was doing. So I knew I was taking chances on trying to buy. See this huge candle down just on the 1 hour. So I knew I was taking a chance, but I wanted to do it anyway. The goal was just don't go red, don't go, you know. I guess we should just go over the trades, because the trades say it all. I was looking to get back in after I got out at 2R reward. So on the first trade, we got out, big run up, great second target hit. It pulls back 1.5 of the risk reward, and I was only risking 1/2 of a reward when I already had 2 full rewards. I was risking 1/2 on the second trade, and I lost. And then I risked even less on the third trade, which I was still up for the day on the third trade here, thinking I'm going to go catch it on the bounce. Then I broke even here. And on these 3 trades right here, thinking it's going to go over this trend line, 3 trades, I basically just give back the last that I have left. All right, couple break evens and 1 loss, and then I'm done. So that was the idea. The thinking along the whole way was it was dangerous because the price had fallen below the 20 and the 50 moving average on my main chart, on my foundation charts, which is the 10,000 tick chart and the 15-minute chart. So on both of those, we have price falling underneath the 20 and the 50. 15-minute chart, prices below the 20 and the 50. And the 10,000 tick chart, prices below the 20 and the 50 right here. Not poking through like this candle. Not poking through, but actually closing and continuing through, right? So I knew to be very careful. Right here, when it's in between the 20 and the 50, that's the caution zone. But once price starts to drop below, I go back and forth, and I need to get more rigid with my rule on this. Should I continue to look for bounces as long as the 200's going up, 200 moving average is going up? And I thought I had that rule, but today I just don't feel like it. Or apparently I did feel like it because I kept taking trades. So I guess that's what I was trying to do. As long as it was above the 200, even though it's below the 20 and the 50, I had a rule like that a while back. So I guess this is a good learning lesson for me to just sort of figure out what I'm going to make this rule. Am I going to take trades if price starts closing and pushing below the 8 and the 50, as long as it's above the 200 moving average on my foundation time charts? I had that for a while. I had that as a rule that I could still take trades. So I need to figure that out. That's a weakness in my system. I either say no or I say yes, as long as it's above the 200 and the 200 is going up, we could still look for bounces. Or no, when it breaks below the 20 and the 50, no longer look for bounces. If that's the rule, then I broke my rule today. So the reason why I probably even took these trades down here is because I haven't really made a concrete decision on that yet. Because these trades could have been avoided today had I made a solid decision to no longer take trades if price falls below the 8 and the 20 and the 50 EMA on my 10,000 tick chart and my 15-minute chart. So I could have avoided those losses and ended up with some green today. All right. So I don't know. I don't know what I'm going to do about that. So I'll have to figure that out. Like right now, I want to take a trade. Because but I can't take a trade. I've already lost everything. Right now, my main concern is to don't take any more trades. And to live with it, even if it goes up from here, to live with that. Until I'm able to do that, I don't think I'm going to be able to go professional. Because every trader has to have that ability. Every professional trader has to have the ability to cut themselves off from trading at a time when it's the best place to take the trade. Let that sink in for a second. Let that sink into my mind for a second. Every good trader has to learn when to cut the trades off, even if it's at a place where it's the best time and place to take a trade. So no more trades, especially right now at lunchtime. So those are my 7 trades today. 1 big winner, and the rest were break-evens and losses, to where I lost everything I won. I'm down to break-even for the day. I lost all my rewards from my first trade, and now I'm break-even for the day. If I were to continue to trade and lose and continue to lose, that would be a devastating blow to my psychology and emotions. And it would be a devastating blow to everything that I've learned up to this point of journaling and recording and just trying to grow up and mature to be a professional trader. It would be a devastating blow. It would be very depressing if I were to end the day having revenge traded, having been up and lost it all, then revenge traded and ended up in a big hole. So even if I'm at the point where it's the best time to buy, I have to cut my trades off, and I will do that right now. So I'll see you on the next video. Better trading next week. Lord willing. Peace. All right, what a roller coaster ride. We have determined not to take trades in the danger zone, or I'm pretty sure that's where I'm going with this. When price falls in between these moving averages like this on a 10,000 tick chart. I did trade against my plan today. I did take a trade outside of the moving average trendline break ICT strategy, and I just bought what's called a catch the bottom trade, where I put on a certain dollar risk. I looked at the fair value gaps. I looked at the Fibonacci retracements, and I made an educated guess that this was at least nearing the bottom. So we jumped in and we got out as soon as we, hit some profit on it. And of course, it's going up and up and up past that profit. We caught right down here in this fair value gap boxes areas in between 50 and 60% pullback on the 10,000 tick chart. And it looked like it was worth a try. Here's the 60-minute chart. And you can see where it pulled back into these fair value gap areas. An inverse fair value gap plus the a consolidation area and plus the 50%, 62%. It didn't close below 62%. It dipped down into this consolidation area. It just looked like a reasonable area to give it a shot. And the disappointment is that I traded against my plan. I only wanted to trade the moving average trend line, the Maddox strategy that I have. And I decided to trade this last trade. I'm not happy about that because I do believe I'm going to be trading multiple strategies when the time comes. But this month of March, I only want to trade one strategy. So I got to go back, refocus. Although it was profitable, although I'll probably be trading it on a regular basis, this kind of trading, the goal is for the month of March to only trade the Maddox strategy. Moving average trend line break ICT strategies. Okay. So I just want to put that in there and talk about that, what I did here, because, I broke my rule even though it was successful. I don't want that to become a habit. I have to stay focused. I'm doing much, much better about staying focused on this one strategy for the month of March. And I don't want to break that. So I'm going to just confess what I did here with this breaking my rule, and then hopefully it won't happen again, at least until the end of March. I want to do this one strategy for the month of March.